Own sweet home, own sweet home. I dream of my own sweet home. Right here, right now. Amit Inamdar will show you how. Call Amit and you are set. Or just visit ownsweethome.net.
DRE license number 013555522 and NMLS number 236574.
Hello, welcome Radio Zindagi listeners. This is RJ Renuka. Today we have another exciting show with Amit Inamdar. You are going to get the power-packed 30 minutes of information on complexity of loan transaction. We always welcome you to call us at 510-770-1550 to ask a question on the radio. However, if you are unable to get in, you can always submit a question for a personal response. Just go to Amit's website, ownsweethome.net, and click on the radio show link to submit your question. And you can always find Amit Inamdar just by searching his name on Google. So, hey Amit, welcome to the show. Today we are talking about the complexity of loan transactions, and the interest rates have dropped in recent weeks, and it is good time to refinance, it's good time to buy a home. So let's hear more from you.
Hello friends, thank you Renuka, Own Sweet Home, and welcome to my show, Power Hour with Amit Inamdar. That's me. As Renuka indicated, the interest rates have dropped, and anyone who bought or refinanced before beginning of this year is a good candidate to look into refinancing again. Those who are on the sidelines due to increased home prices should get some comfort that even with higher home prices, their monthly payments will still be lower due to lower interest rates. To understand this interaction, just call me and I will explain it to you.
Hey listeners, you want to get hold of Amit? Just call us in the studio right now, 510-770-1550, 770-1550. So Amit, we are going to talk today about the complexity of loan transactions, as you said. Could you please talk more or elaborate more for our listeners?
Sure. So listeners and all the buyers and financiers out there, loan transactions, as you know, and when you have gone through it, are very complex and affect all the parties involved in the transaction. Sellers get affected if the buyer's loan is not approved and the property comes back on the market. Buyer loses a home if the loan is not approved and the loan approval goes south. And in a normal home refinance transaction, homeowner may get declined for better loan terms. So it's not only important to get the right loan in the beginning, but also plan for future changes in your home ownership. During the housing crisis of 2008, which keeps on coming again and again every time anybody wants to buy a home, many people lost their homes for not planning properly, overextending themselves or depending on attractive teaser rates. They kind of made wrong decisions. So wrong loan may break your home, and that is why it becomes critical to work like an expert like me who understands your emotional home needs and advises you objectively based on your ability to repay.
Losing a home due to a wrong loan, yes, many people got affected in the crisis and, in 2007, 2008. So how do you plan for safer home ownership, Amit?
Availability of the loan depends on multiple factors such as the borrower, type of property, the lender that fits your specific needs. Being a real estate and mortgage broker, I have access to over 120 mortgage lenders, not just the banks, okay? Mortgage lenders. As you know, rates fluctuate every day and sometimes during the day. There are many micro events that affect the rates, like the drop in the oil prices, where we saw interest rates drop accordingly in recent days, and some actions in the past, like Fed's decision to taper the bond buying activity, or the ECB's decision to buy bonds, or even the Greek financial problems, right? And the unemployment reports and the GDPs and so on. So there are many factors that basically affect it.
So listeners, if you have any questions regarding real estate loans or our today's topic, complexity of loan transactions, do give us a call in the studio. Number is 510-770-1550, 770-1550. So Amit, you do prepare your first-time home owners or home buyers for the unforeseen situations. Your first-time home buyer webinar is very comprehensive and allows one to pre-qualify themselves using the tools on your website. So there are a lot of calculators on your websites too.
Yep.
Could you tell more about it to our listeners?
Sure. The webinar that you just talked about is essentially free, okay, and it's easily accessible online on my website, ownsweethome.net. If you want to learn about current markets and home buying, you can view the first-time home buyer webinar. Actually, I should call it Bay Area home buying webinar because it's very specific to the Bay Area markets, If you are the first-time home buyer or just want to feel comfortable with the home buying process, this webinar is for you, and you can visit the website and listen to this recorded webinar. This not only will give you the overview of the home buying process, it will also pre-qualify you, let you know more about the neighborhood selection, the school selections, etc. The link is located as an image on the left column, and you cannot miss it. If you do not remember the website, just Google my name, Amit Inamdar, real estate broker, and you will get to my website. After you have reviewed or viewed this webinar, all your questions will be answered, and you will, even more than what you knew, will get answered, okay? Because there are things that you don't know, okay? And based on all the new information you receive, you will have new questions too. So this is when we can have a one-on-one meeting with me for your pre-qualification and neighborhood selection.
Yes, listeners, as a first-time home buyer, or I will say as a second-time home buyer also, this webinar is a must. As Amit said, it's easily, you can easily find the webinar. You know what to do. Google Amit Inamdar, real estate broker, and you will get to his website. So, Amit, with so many external factors affecting the interest rates, you talked about bonds, you talked about Greek financial crisis and all of that, unemployment rate and everything. What should a general consumer monitor to understand the direction of the interest rates?
Right. So the daily monitoring, like everybody kind of looks at what Dow is doing, what Nasdaq is doing. So similarly, if you can monitor the 10-year bond yield on like maybe finance.yahoo.com, that's a good indicator of where the mortgage rates are headed. So when you come and meet with me, I ask you very thoughtful questions. Understand your needs regarding refinancing or financing or getting the home of your dreams and guide you through the maze of options that you have. My job is to save you money. Many times homeowners run after refinancing every time they see a lower rate. However, every time you go for a lower rate, you add 30 years more on the loan repayment terms. That means starting the interest-paying cycle all over again. Loan agents may not advise you on that because that affects their commission at the expense of increasing your homeownership cost. Many loan agents even promote 5 to 7 year arms to lower the payments just to be able to churn the loan without showing benefits of already low interest rates that give you peace of mind for the duration of your home ownership.
Wow, what you talked about, I didn't know, Amit. So, can you talk more about the actual loan process?
Yeah, absolutely. So, if you are buying a home, let's say, all you have to do is just pick up your phone, give me a call, okay, and I will pre-qualify you and tell you the approximate range you will qualify for. If you are serious, then I will actually do a pre-approval for you for the loan based on your thorough evaluation of your credit, your income, your assets, and your ability to repay. If you are a seller of the home, in addition to marketing your home for sale, I first advise you whether you are in a position to buy first or sell first. Okay? So, based on that, we can figure out the financing part, what you should do. In this market, if you sell first, there is no guarantee with a lower inventories that you will be able to buy right away, considering this tough competition that you face in this market. As you see, I work way different than the typical process of giving you the rates and asking you a complete loan papers in the beginning. Okay, so that's basically I kind of start, with my clients when they come to me.
So you believe in education, Amit. You always talk about educating your clients about the process, whether it's a loan process, whether it's selling the home or buying a home.
Absolutely.
So listeners, if you want to get hold of Amit, if you have any questions regarding real estate loans or today's topic that we are talking about, complexity of loan transaction, loan process, do give us a call 510-770-1550, 770-1550. So Amit, especially, before someone makes a decision on big items like financing, you like to educate your clients. So could you please tell our listeners about your rate monitoring system?
Right. Informed decisions, right? I mean, that's what I believe in. And because they give you a good peace of mind. And that's my goal. My clients have saved hundreds of thousands of dollars through my rate monitoring system. Once you work with me, I have your information in my system. So when the rates drop and it's going to benefit you, I call you to alert you about the money saving opportunity. I know you are busy with work and family. So you need a proactive loan consultant like me who is going to keep you informed on money saving opportunities that come up. And I have some tactics that if you follow, you don't have to add that extra 30 years on your mortgage. Okay?
Can you talk a little bit more on that one? Even I was shocked when you said, you add 30 years to the loan and may end up spending more.
Right. So, yeah, and that's absolutely true, right? I mean, I not only help my clients lower their monthly payments, however, advice on how not to add more years on the interest payments and the loan terms. I can do your loan amortization for as little as 8 years to as high as 30 years and every year in between. This saves you interest over the life of the loan. Remember, if you plan to retire at a normal retirement age of 65, then you should pay attention to these extra years you add on the mortgage terms with every refinance. Otherwise, you will be paying the mortgage in your retirement years, which of course will not be retirement years if you are making a wrong decision and wrong choices in financing, since you will be working to pay off those mortgages. So your payment is a big part of retirement, and it should be paid off by the time you retire. This also means you should buy the home before your 35th birthday, and 30-year mortgage means it will be paid off by the time you retire, that's age 65.
We are going to take a short break and we'll be right back.
Have you joined the Happily Ever After Club?
Happily Ever After Club?
Happily Ever After Club. Membership is automatic once you buy your dream home from Amit Inamdar. He's both real estate and mortgage broker. One stop, no need to shop.
Oh, Amit Inamdar from Own Sweet Home.
Yes, that's Amit from OWN Own Sweet Home. Call him today, 510-364-6686. Again, 510-364-6686. Or visit ownsweethome.net. That is ownsweethome.net. DRE number 013-55522 NMLS 236574.
Welcome back, friends. This is Amit Inamdar. And if you are in the market to sell, buy, or finance your home, you will get unbiased advice that will save you money. And that is my promise to you. To get hold of me, just Google my name, Amit Inamdar, real estate broker, and you will know ways to find me. Having all your questions answered at one location and by one person means saving time, money, and having peace of mind that you are cared for by someone who knows this business. Today we are talking about the important topic of loan process, the complexities, and how to save money on home ownership.
So Amit, there are many listeners who want to know how does one get qualified for the loan?
Yes, of course, right? In order to start the home buying process, I collect typically the following documents from the prospective home buyers. And they are your W-2s for the past 2 years. They tell me that you have a consistency of income and also on the same line of profession for past 2 years. Then I look at your pay stubs to make sure you are still making enough money based on the history of employment. Then I look at your assets. These include any assets that can be liquidated in a reasonable amount of time. They include your bank statements, your stocks and bonds, your certificate of deposits, funds from overseas, and any gift funds that you may be bringing towards closing, or down payment basically. I also look at your 401k, individual retirement accounts, and any other retirement accounts as a source of funds for down payment, or also source of reserves lender required to make sure you can still pay the mortgage in the times of difficulty, especially if you lose a job or something. The lenders are kind of worried, so you have to have some reserves that are available in your bank. I mean, that's what lenders look for.
So how does the credit report come into play during the loan process?
Right. I mean, I did skip that, didn't I? So absolutely, the credit report is a very critical part of the loan process, right? In addition to knowing your credit score, and a lot of people are monitoring their credit scores on their own, or the companies are actually helping them do that, credit card companies plus their employers, you know. So, so when you run so knowing your credit score, okay, when I run your credit report with your authorization, I get to look at all your debts, okay, and that's what the credit report is important for in addition to your credit scores. These debts may come from your revolving credit card payments like car loans or maybe student loans or other mortgages that you may have, or any other debts for that matter. Then I calculate your debt to income ratio. This is all your debts combined divided by your gross income. So on a monthly or annual basis, this ratio should be at different percentages depending on the type of loan you're applying for. I mean, some loans allow you to go up to 50%. Most of them allow you to go only up to 43%. If you're on the jumbo side, then you're stuck at like 38% or even lower, depending on your down payment versus, the reserves that you have. This sets a stage for qualifying you for the mortgage. Now your loan is ready to be submitted to the underwriter.
Listeners, you are listening to Power Hour with Amit Inamdar. If you have any questions regarding real estate or loans, give us a call 510-770-1550, 770-1550. So Amit, who is the loan underwriter? I mean, and what is his or her role?
You know, a loan underwriter is a person who, based on the guidelines set by the lender or the investor or the government, okay, analyzes your financial and credit worthiness to approve you for the loan. They are tasked with the burdens of making loans that make money for the investors. So they have to show tremendous diligence in analyzing your financing, your credit worthiness. Having this business for so many years, I have faced almost every type of situation one can think of, even though the new rules that come up and the answer changes and the solution changes. You know, so when I look at your finances, I can tell you upfront what will be the underwriting roadblocks. You know, prepare you in advance by asking you the right question so you can have answers to sell through the loan process easily. So you don't get into a contract and then realize, sorry, you can get a loan because something was wrong with your finances to start with, you know.
You talked about the jumbo loans. So what are the loan limits and how do the rates change with these loan terms, loan limits?
Right. See, you know, first of all, your borrowing ability depends on your credit scores, your income, your down payment. Low credit score means higher cost of borrowing, meaning higher interest rates. Less down payment means higher cost in terms of either rates or mortgage insurance or even the points that are charged on the loan. Loan limits play a big role in determining the rates also. For loans below $417,000, rates are lower than the loans that are below $625,000. And these are the limits set by the government on these loan amounts. But nowadays, you know, like there are very, very few properties available that can fit into this criteria unless you have a really large down payment. The median price of the home, even in Fremont or many areas, is above $900,000. So for jumbo loans that are above $625,000, rates are even higher and sometimes require like a 20% down payment. However, you know, the lenders are currently competing for business, you know, and even jumbo loans are now available with 10% down payment and with no mortgage insurance. I even do loans up to $750,000 without a need for any kind of a mortgage insurance and as little as 10% down payment. I have jumbo loan programs that go up to $3 million of purchase price with as little as 10% down payment and up to $1 million. And remember this, you can get $1 million jumbo loan with as low as 5% down payment. The program just came on board just beginning of this week. Okay, so So these are good for those people who have great income but do not want to put down a lot of money for down payment.
So, Amit, sometimes I hear about the 5% down payment loans or even as low as 3.5% down payment loans.
Right. Yeah. So just like I said, the new jumbo programs came up with 5%. But typically, if you look at these things, 5% loans were available for loans up to 417,000. Anyway, FHA insured loans can be done up to 3.5% down payment for loan amounts up to 625,000. And this year, beginning of the year, FHA mortgage insurance have gotten reduced by another 0.5%, making those FHA loans affordable again. So the low FHA interest rates combined with your low credit scores and lower mortgage payment or mortgage insurance payments, there may be some people maybe just be right in taking the FHA route. FHA loan, just to let you know, can be done with credit scores down to 580. Whereas conventional loans may require credit scores of 620 and above. I have seen some lenders going down to the credit scores for the conventional loan also. What is interesting today in the market is as the home prices have climbed up and the loans are surpassing the government loan limits of 625,000, and the private lenders are now getting more aggressive for the low down payment loans such as 5% up to $1 million loan or 10% up to a $3 million loan amounts.
Amit, we have a very little time left. Can you talk about the borrower requirements for the loan?
Oh, absolutely. Your income needs to be consistent. Okay, you need to be in the same line of profession for at least 2 years, unless you just finished school, or meaning you just got a degree from college or something, right? Things get more complicated if you own a business or get paid on 1099 instead of W-2s. Business owners must have 2 years of taxes, even though I have lenders who may consider as little as 6 months of self-employment to be sufficient as long as you have one tax return filed. You should have your own funds seasoned for 2 months. Any large deposit in excess of $500 should be sourced. Gift funds must be from a close relative like parents, spouse, cousins, etc. You should have funds for reserves in case of emergency. Typical 3 months. It takes, look at it this way, it takes about 2 months to find a job, 1 month to get paid, right? So that's why this is like a 3 months of reserves that are required. If you have unreimbursed business expenses, like a lot of times people will file those and say, hey, employer never paid me back for these. And when I see a pattern of that on your tax returns, that actually reduces your income because those expenses are must for you to continue your job. That's what it means. So one more thing that to note, when you are planning to buy a home, do not go and open new credit. Okay, don't go to Macy's or some other small store and try to get that. Okay, so any extra credit will reduces your ability to borrow. So those are some of the advice that I would like to have. And I know tomorrow is
India Independence
Day, 15th of August, and we have a special treat for you. And Renuka, you want to tell about that one?
Yeah, it's Saukya singing India National Anthem.
Right. So Saukya Inamdar, she is a really great singer, and we're just going to play the national anthem for you that she sang. It's an Indian national anthem, okay?
Jana Gana Mana Dhinayaka Jaya He Bharat Bhagya Vidhata Punjab Sindh Gujarat Maratha Dravida Utkal Banga Vindhya Himachal Yamuna Ganga Uchal Jaladi Taranga Tava Shubha Name Jage Tava Shubha Shisha Mage Gahe Tava Jaya Gatha Jana Gana Mangala Dayaka Jaya He Bharat Bhagya Vidhata Jaya He Jaya He Jaya
So happy Independence Day, everyone. Enjoy tomorrow. I'm sure there are a lot of activities going on around here. And I will see you next week. Meantime, happy buying, happy selling, and own sweet home.